You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back, everybody. Welcome back, Brandon. Not doing too well this morning, are you?
Sorry?
Not doing too well this morning, are you?
Oh, yeah. Geez, just out of nowhere, I've just been smacked with some sort of illness. I probably need to go get a COVID test, to be honest. But yeah, so bizarre. Just woke up feeling real bad, but that's all right.
Damn.
I'm lucky that, honestly, when I woke up this morning, I was like, there's no way I'm going to do the podcast. But my voice isn't too badly affected, I don't think. But yeah, sorry if I sound a little bit under the weather.
No, I don't think so.
But hopefully doing a podcast is better than no podcast.
Yeah, I think so. Didn't you say there was like no cases of COVID in Canberra or something, or a really small number of cases?
Nah, yeah, I don't think there's any active cases at the moment. There was someone that came through Canberra that had COVID, but I don't believe there were any other cases from that incident, as far as I'm aware. Seems like it's picking up in Sydney a little bit. It's so annoying though, because I'm getting the bus to Sydney Airport next week to fly to Queensland. So fingers crossed that can still go ahead.
Yeah, don't stay there too long. Or land that too. Yeah. Oh boy. Yeah, but we've got a lot to talk about today. A couple of different things. A funny story around Jeff Bezos, Michael Burry. Actually, this isn't really a story. Maybe we can just talk about this now. But he deleted his Twitter, which is a bit of a follow-up from last week. We were talking about he came back just last week, I believe. And he tweeted a bunch of things, deleted them, tweeted some more things, deleted those, and now he's deleted his entire Twitter. So who knows what's going on with that man? He's
I'm not sure.
He's a bit of a
it's
wild
a bit weird,
card.
isn't it?
Yeah.
We do know that from what he said anyway, he was he was kind of under not surveillance, but he was under a bit of a, FBI kind of alert. But maybe that's the reason why. Maybe the FBI or someone's just knocked on his door and say, hey, cut it out on Twitter or something like that. Who knows? It seems so bizarre. I mean, I don't know. From what he tweeted, it doesn't sound like he's trying to manipulate the market in any way, shape or form. It's like, what the heck?
I'm not sure. It's weird behavior. I'd love to hear his explanation for why he tweets stuff and then deletes them. And just to know what is actually going on. Because obviously some people tweet stuff and then delete them because they're just like, I don't know, they're drunk or something. Have said that. Yeah, or they just have a moment and they just go on a Twitter storm. But whether it's that or it's something else related would be interesting. But anyway, that was just a bit of a non-story or a follow-up from last week. But we have some news on Warren Buffett this week. A lot of information coming out around cryptocurrency and the markets there that are having some trouble. And a bunch of Q&A questions that we still need to try and get through. They continue to pile up.
They do.
But we'll do our best to get through a couple of those in today's episode. But before we do all of that, today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So basically, you can port all of your trades into Sharesight, either automatically through some of the associated brokers, which are most of the brokers in Australia and a lot of the international ones as well, or you can do it manually. And once you do all of that, it will automatically track all of your capital gains, dividends, dividend reinvestment plans, currency gains, and a bunch of other things such as stock splits and that sort of thing to give you an accurate view of your portfolio's performance. And on top of all of that, you can also use it when it comes to tax time. So Sharesight generates up to 10 different reports that can be used at tax time to work out things such as your capital gains, dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan and use it for as long as you want. You can have up to 10 securities or stocks in your portfolio and use that plan forever. Or if you want to upgrade to have more portfolios and more features, more reporting, then you can also use that link to get 4 months off a yearly subscription, which is a really good deal. And we're right at the end of the financial year for people in Australia and New Zealand. So particularly if you're in those areas, go check it out.
Yep, absolutely. Yeah, thanks to Sharesight always for sponsoring.
Should we? I think I want to start with this Jeff Bezos story because I think it's
Okay, sure.
It's a little bit of a story from something a couple of weeks ago or a month ago, but also something that's happened this week that is pretty funny. But the backstory to what I'm going to talk about today is that Jeff Bezos, of course, was the founder of, or is the founder still, doesn't stop being the founder. He is the founder of Amazon. And of course, his space company, Blue Origin, as some of these billionaires like to do now, is they decide to build a space company and have a little bit of a space race between them. And on July 20th, he is set to take a rocket into space. So he's going to jump on board one of his Blue Origin rockets. Yeah, absolutely.
He's going to be on the rocket.
He's going to be on it. He's going into space. And this,
holy smokes.
This isn't the news story. This actually came out a couple of weeks ago. But yeah, he's going to be on the rocket. It's a 6-seater capsule, 59-foot rocket. And basically the trip is going to go for 11 minutes and he'll get as high as 60 miles above the Earth. And that will be his claim to being the first billionaire to go into space. So that's his. That's what billionaires do these days. They try and find something that people haven't done, and then they go and do it. As insane as it is, but he's going to be the first one. And there's really three major competitors here for this kind of thing, or in the space, because you have, of course, Musk with his space company and Branson also, but neither of them have gone to space. So Jeff, assuming that it is successful, will be the first person to do it. I mean, they've done 15 test flights, which to me, that's not enough. That's not enough test flights.
I don't know. I'd feel a bit nervous.
Yeah, I don't know about that. I don't know if I'd be getting in a rocket after building it and only doing 15. I mean, they've obviously done more flights with their rockets, but 15 test flights for this specific route. I don't know. What do you think about that? Would you be getting on board?
To be honest, I don't think so. I'm kind of in the Elon Musk camp. He just builds the rockets. He's going to stay on Earth for a fair while. He'll go to Mars eventually. But he's kind of the opinion that, I don't think I'm keen to go to space on the first ship, but there will be some people on this Earth that are very keen to do that. So more power to them. I mean, it's going to be risky. We'll have that disclaimer right on the rocket. If you get in this seat, there is a risk. Rockets go boom. But there will be some people crazy enough to do it. And clearly Jeff Bezos, I mean, part of me just wonders, is this just like a big advertisement kind of thing? Because the amount of press that it would draw would be insane. I mean, imagine everybody around the world watching Jeff Bezos in this rocket flying up in space.
Yeah. Huge ad for not only Blue Origin, but also for just Amazon and anything that's associated with Jeff Bezos. Anything at all that's associated with him becomes, a big story out of this. It's kind of like, Red Bull does a lot of this. Is they just do these huge, crazy stunt events where they have people, falling out of space or jumping off a bridge or something. And the whole stunt is basically just an ad for Red Bull.
Pretty much.
And it's really clever because everyone is interested in seeing people do crazy stuff that they wouldn't do themselves. Yeah.
Sorry, I was going to say Red Bull are very interesting because Red Bull started out, I can't remember where. It was like in Austria or something.
Yep.
Austria, yeah. And then I can't remember where. There was another country that had it, and then it got banned in that country. So people would have to go over to Austria to buy their Red Bull, and it became like this. It's not like a drug, but it became like this. Oh, it's a little bit edgy. It's a little bit dangerous kind of thing. But the genius of Red Bull is that they totally bought into that. They just went crazy. And even now, as you're saying, all of their advertising is about risky, edgy, extreme events. Like you're saying, a man jumping from space and parachuting back to Earth, or doing those crazy stunt plane events, or motorcycles, or something like that. But I just thought that was an interesting anecdote. Is that is a company that saw that their product was kind of a bit edgy, a little bit illegal even, and they totally just went crazy on the advertising to actually push it like that, and it's worked.
Yeah, I mean, they have built one of the most successful beverage brands of all time.
Absolutely.
Even if you go to the energy drink part of the aisle at any supermarket, just look at the pricing, right? Red Bull cans are the smallest size that you can get, and they are the most expensive. You have something like Monster Beverage, which has a big part of the market, but their products are significantly underpricing Red Bull. Red Bull has massive pricing power in that space, and Red Bull gives you wings. Did you remember? Do you remember they got sued for that slogan?
Oh no, did they?
Yeah,
why did they get sued?
This was a while ago. They got sued for false advertising, which is the most ridiculous thing ever, because you should be able
because they said Red Bull gives you wings.
Correct. Yeah.
And they say, oh, actually, no, it doesn't.
Yeah. And
oh my God.
What you could have done for a while, this was in maybe when I was in early high school or something, or maybe even late primary school. But when the lawsuit went through, if you had a receipt from having purchased a Red Bull in a certain period, which who keeps a receipt for that? But if you had, you could have gone to this like certain website and gotten a free Red Bull or something. It was really weird. It was like the part of the deal was that the general public who had purchased Red Bulls were eligible to get basically a refund on the product,
that's insane.
Which is stupid, but yeah,
go get a free Red Bull, and then that gets you into drinking Red Bull again, and then you give the company even more money.
Yeah, maybe Red Bull pushed for that. Okay, fine. We'll give out free Red Bull to everybody. Fine. Put it in everyone's hands.
It's not a half bad idea.
No, not at all. No, but okay, so that's all. None of that, what we spoke about with Jeff there was...
Back on track.
Yeah, we weren't off track at all there. We don't go off on tangents here. But back on track. So none of that was news this week. This has been news for about 3 or 4 weeks, I think, or maybe even a bit longer. But what happened this week was a petition on change.org has been going around in relation to this. And I had to include this because this is hilarious. Right. The title of the petition is... Do not allow Jeff Bezos to return to Earth.
Wow. It's surprising how many people hate him. I find that quite surprising. Maybe it's just like the anti-billionaire kind of movement.
Yeah. Well, it is exactly that, right? If you go to the petition, usually these petitions have like a big paragraph of what they're about. In this petition, the only description of it is billionaires should not exist, ... on Earth, or in space. But should they decide the latter, they should stay there.
Wow.
Which is pretty funny.
That's hilarious.
Yes. I mean, obviously it's a massive joke, but it's very, very clever, I think. I don't know. It's very good. The petition has over 110,000 signatures and is closing in on being one of the top signed petitions on the entire site. And change.org is not small. It's like the number one site you go to if you want to do an online petition. So like if you want to petition the government, for example, you can do it through change.org. It's pretty funny, I thought.
Yeah, surprising. I mean, this kind of shows how many people are, just as a straight rule kind of anti-billionaire. And, I can understand where they come from. I've actually got an interesting story coming up to show you that, not all billionaires are bad people. No. And I don't know if we should just keep rolling. Do you want to keep rolling into that story? Go for it. And, a lot of, I can understand people are kind of angry at billionaires because, billionaires have it easy. They have all the money to do whatever they want. They're never going to be under any sort of stress because they can just pay to get out of it, kind of thing. But there are a lot of billionaires that are actually, good people, and their mission in life is to change something for the better. That's why I don't really understand all the hate that Elon Musk gets, because I just look at everything he's doing. It's like every one of his goals seem like genuine and seem helpful, like transitioning to sustainable energy, making humans a multiplanetary species. That just makes sense to me. But anyway, so this story here is about Warren Buffett. And in the news this week because he has given away another $4.1 billion to the various charities and organizations that he supports. And he's also resigned as the trustee at the Gates Foundation.
Right.
So it says here, Warren Buffett said Wednesday he will donate $4.1 billion worth of Berkshire Hathaway shares to 5 foundations. He does this every single year, by the way. And that he will resign as the trustee at the Bill and Melinda Gates Foundation. This year's donation marked the halfway point of the 90-year-old Oracle of Omaha, who in 2006 pledged to give away all of his Berkshire shares through annual gifts to the Bill and Melinda Gates Foundation, the Susan Thompson Buffett Foundation, the Sherwood Foundation, the Howard G. Buffett Foundation, and Novo Foundation. So back then, Buffett owned 475,000 Berkshire A shares. Today, he owns 238,000 Berkshire A shares. So it's worth, and that stake is worth about $100 billion. So Buffett said in a statement, "Today's a milestone for me. In 2006, I pledged to distribute all of my Berkshire Hathaway shares, more than 99% of my net worth, to philanthropy. With today's $4.1 billion distribution, I'm halfway there."
Yeah.
So yeah, I mean, this is just great to see, and I don't know if Warren Buffett gets much hate. To be honest, I don't see him getting much hate. I hope he doesn't, because I've actually watched. Have you watched the Warren Buffett documentary?
The HBO one.
HBO one, yeah, where it goes through, how he's always. The money he's like one of the richest people in the world, but the money to him has no utility. Yeah. So for him, it literally will just sit there because, he buys like a $3 breakfast every morning from McDonald's. He drives some beat up old Chevrolet that he bought for like peanuts. He's just not someone that lives a luxurious lifestyle or thinks of money as some, must have thing, and he wants to be the richest person. So yeah, I find it, I find it a little bit annoying sometimes when people are just blanket, "I hate billionaires." I can understand the reasoning, but I think it's worth noting that there are plenty of big billionaires out there that are just trying to do the right thing and help out wherever they can.
Yeah. I mean, I think on the very surface, if you just look at someone who has a lot of money, it just looks like someone is hoarding so much capital that could be used otherwise in things that could help society. And I think that's the main view that a lot of people have is like, if Buffett has $100 billion, that money is not being used elsewhere. And that's kind of just I think that's just a misunderstanding of what it means to for Berkshire shares to be worth $100 billion. That's not $100 billion in Warren Buffett's bank account. That's the value of businesses that have a lot of capital deployed, that are providing jobs and creating products and services for people. Like the money that is just representing the value of the business is really in the machine of Berkshire Hathaway or the machine of Tesla. That's really where the money is. It's not in Musk's bank account. In fact, Musk is in massive amounts of debt if you just look at his personal wealth because he's taking
he uses his Tesla stock as collateral, doesn't he?
Exactly right. Yeah. So he doesn't even, it's not as if he sells down some of his shares and then spends that money and just goes around running around spending billions of dollars. That money just reflects the value of a business that didn't exist previously, and would not exist if it wasn't for those people, in my opinion. So yeah, I just, it's obviously very good to see that people like Buffett will donate all of their wealth, because I agree with the notion that it's probably not the best idea for someone to accrue $100 billion and then pass that on to their children, because then you can get into a situation where, I mean, the money is still probably going to be in shares and that sort of thing, but you may get into a situation where your children are not as productive as you were, right? They don't have that drive to actually improve society. In many cases, it's better to just pass that on to people who can deploy it into charities and get that money working straight away. But I don't know.
Yeah, I just wanted to finish off this story. He said, Buffett said his 16 annual contributions to give the 5 foundations over the... sorry, I read that wrong. Buffett said his 16 annual contributions to the 5 foundations over the years were worth about $41 billion when dispersed. Buffett is Berkshire's largest shareholder, owning about 39% of the Class A shares. I wanted to just quickly note why he's doing this. And if you don't know... when was it? June 2010 is when Warren Buffett and Bill Gates and Melinda Gates got together and they formed what's known as the Giving Pledge. And the Giving Pledge is a campaign where essentially they just try and recruit billionaires and get them to pledge a vast majority of their wealth to charitable causes, if they pass away. And where was it? As of 2010, the aggregate wealth of the first 40 pledges was 125 billion. As of April 2011, 69 billionaires had joined the campaign and given the pledge. And by the following year, Huffington Post reported that a total of 81 billionaires had pledged. By May 2017, 158 individuals and or couples were listed as pledges. So, I think overall that, just going back to what we're saying, there are even at the top level, the richest in the world, a lot of those people are not very selfish, and this giving pledge is just an absolute example of people that know that they have more than they will ever need.
Yeah.
Figuring out a way to pledge to give that money back to society in a thoughtful way.
Yeah. I mean, if you had $100 billion, even if you lived the most excessive life, I don't even think you could spend $1 billion if you were living the most excessive life. So in any circumstance, these people know that. Well, I mean, for starters, it's just the value of businesses. It's not like they're hoarding it under their mattress, but they know that it's they don't need the money, right? And their children don't need that much money. In fact, it'd probably be a significant handicap if they had that much money just to start out. So. Yeah, certainly really good to see that people give, but it's also not really surprising in my view that people who accrue that amount of money would give the vast majority of it away when they die.
Yeah. There's no way I could spend that amount of money. Absolutely no way. No way. So yeah, I think if you're just a good person, you think, okay, well, I just want to use that money to change something that I care about. Anyway, should we talk about cryptocurrency for a bit?
Yeah. What's going on?
Not that I really like to talk about it, but this is very interesting news, and I think it highlights a bit of a point that I wanted to talk about. So this article is a few days old now. It's from June the 21st, and it says here, China's renewed crypto crackdown wipes 400 billion off the market as Bitcoin slides. It says here, this is from CNBC, China's renewed crackdown on the cryptocurrency has wiped 400 billion off the value of the digital currency since Friday, when a major Bitcoin mining hub ordered miners to shut down operations. Bitcoin was down more than 8% in the last 24 hours. Again, this was from June the 21st, trading at $29,791 US. It broke below 30,000 for the first time since January 27. So...
Wow.
I'm just trying to read through the rest of this thing. Over the past few days, China has stepped up its efforts to rein in the country's cryptocurrency industry. Sichuan is one of the biggest Bitcoin mining centers in China. I think that was the one that got shut down. And I find this interesting because, people always say, Bitcoin and cryptocurrency is decentralized, right? That's always the argument. It can't, a country can't have an impact on it because it's decentralized. They don't have control over it. Well, I mean, just look at a story like this. I mean, China, which is by far the world's largest cryptocurrency miner. Actually, I forgot to look up how much Bitcoin is mined in China. But it's a massive, it's just a massive chunk of crypto is mined in China.
65%.
65%, right. Okay, 65% of all cryptocurrency mined in China. So, I mean, you have to be kidding yourself a little bit when you say, oh, yeah, look, I'm in crypto. It can't fail because, countries can't have an influence on it. It's decentralized. And obviously a story like this clearly proves that's not the case.
Yeah, absolutely. And I think... certainly in places like Australia or the US, the government is less likely going to impose these massive restrictions on people. But in a country like China, the rules are very, very different for how they regulate what people can and can't do. Things such as the internet that is massively restricted and watched.
Yeah.
All payments are processed, all official payments are processed through a Chinese-owned bank, essentially, instead of here we trust things like Visa and MasterCard to do all those transactions. You can't do that in China. The Visa and MasterCard are banned. And the same is true in Russia. So in those places, that's why things like WePay is way more popular, where it's just a wallet, basically, a digital wallet, where you're not actually processing a payment. There's no like kind of trust network there. But yeah, the rules are different in different countries. And yeah, I mean, 65% of Bitcoin being mined in a country that is, has a history of imposing kind of restrictions in these kinds of ways is something that people should think about.
Yeah. Yeah, definitely. I also wanted to bring up one more point while we're talking about this. And this is a point that I actually thought about thanks to Michael Burry when he was tweeting recently about Bitcoin. And Burry said, even if you think you're the world's best crypto trader, you need to factor in how much leverage is in things like Bitcoin. And that's not something that I personally know the answer to, how much leverage is in Bitcoin. But obviously, Burry believes there is a hell of a lot of leverage, which is in Bitcoin. So if people take out a massive loan in, say, US dollars to buy Bitcoin, and then they get a big margin call on that debt, and then they can't meet it, then they'll still have to sell the Bitcoin to repay the loan in US dollars. So Bitcoin would still see massive selling pressure.
Yep.
Does that make sense?
Definitely.
That's something that I hadn't even thought about before, but you're right. I mean, people say, it's, decentralized, it's not linked to the US dollars. But I mean, if people are en masse taking out loans in local currencies to buy Bitcoin, then I guess it is kind of linked to another currency in a way.
Yeah. And the part where it's linked to all other assets is that these people who need to cover their loans probably don't just own cryptocurrency. They may own significant amounts of high growth business stocks.
Yeah.
They might own other stocks. They might own real estate. And this is where you get into a situation where if you have a lot of people defaulting on loans, it flows into every part of the financial markets. So yeah, I mean, and what you just said then is correct. I mean, we have no idea how much debt is in Bitcoin. I don't know if that's something you can figure out. I wish Burry would have provided some data on that to support his idea his claim there. That's the right word. As I said in my video on this, it would not surprise me in the slightest to know that there is a lot of debt in the cryptocurrency space, because high returns attract riskier and riskier trades and people who are trying to push it further and further and further. So it would not surprise me at all to know that there's a ton of debt there. And that makes people more sensitive to sharp price changes down. So whether
absolutely.
we're seeing, the early stages of that now, or we've seen a lot of that now, we never really know to what extent these things are going to implode, but or if at all. I mean, you have Bitcoin now down 49% from its April highs of 63,000. It's now around a bit over 30,000 a coin. But as you mentioned, it went briefly below 30,000. The entire 2021 gains for Bitcoin have been erased. It's basically flat. And you have other things like Dogecoin, which is not getting as much news recently anymore, although it's starting to come back now because of what's happening. But Dogecoin at its high was 72 cents a coin, and at its low this week it was 17, which is a 76% drop. So, and I mean, things can get a lot worse than that. Some of these coins have and will go to zero. There was one that I haven't looked too much into this yet. I saw a headline, but Mark Cuban was backing a coin called Titan, and that coin just went to zero yesterday, I think.
Okay.
And he's had to embarrassingly come out and basically say he didn't do his due diligence on that. Because it went to zero. It just collapsed in the space of about a week, and he lost a bunch of money from it. And that's going to start to happen, I think, a lot. So people need to be prepared. And if that happens and a lot of people have debt against those coins, then they're going to sell other coins, and they might sell stocks, and they might sell commodities, they might sell bonds, and we'll kind of see what happens. We never really know. Yeah.
I think, I don't care if people buy cryptocurrency. I think it's silly, but I don't care if people want to do that. It's their money. I don't care if people go to the casino and want to chuck down money on the roulette table. But I think just as a bit of a word of warning, I guess, if you are investing in the cryptocurrency market, it's worth saying to yourself, this is quite speculative, and just be comfortable with the idea that it is speculative. Don't trick yourself into thinking that you're making this big investment, because remember, as we've spoken about before, it's a non-cash producing asset. I won't bother getting into that, but I think it's just worth remembering that at the end of the day, I'm buying Bitcoin. It is only worth what the next person is willing to pay for it. And, if that sits well with you, if you're comfortable with that, then go for it. But just know that, I guess, going in.
Yeah, I think a big question everyone's kind of talking about at the moment, if you just read through cryptocurrency articles, it's kind of chaos at the moment about what people think is going to happen next, because no one knows. But
no one knows.
Yeah, I mean, we might see another 2017 style collapse where I can't remember how much Bitcoin went down. I think 90% or something crazy like that. And then after that, in 2018, continued to decline. So you had multiple years of decline for the crypto market. Will we see something like that, or will cryptocurrency, have they kind of reached a scale where Bitcoin might collapse a bit, but there's a floor for it now? Is that going to happen? Yeah. We really have no idea. I went back and looked at our first podcast of the year, I think it was the first podcast of the year, where we made some predictions about 2021. One of the predictions we made was about Bitcoin. And we both said in that podcast, we were both very, very confident that it would be lower at the end of 2021. So far, we're not right or wrong. It's flat. We're 6 months into the year, almost exactly halfway through. And I mean, for the first 5.5 months of the year, or 4 months of the year, we were very wrong. But we're flat now. So I guess we'll see what happens for the last 6 months. Do you want to change your opinion on that prediction? Or are you going to hold? What
did I say? Did I say down? We both
said down, and we were both very confident about it.
Yeah, I'll still say down.
Yeah, I would still say down, and I'm still quite confident that it will be down.
Yeah.
I don't know to what extent. I think I would be surprised if crypto was obliterated. I don't think it's going away. And I don't think Bitcoin's going to go under $1,000, for example. That would really surprise me. But I wouldn't be surprised if it, was at 20,000 at the end of the year, or 15,000.
Yeah, I just, in all honesty, and obviously I don't know, but I think with cryptocurrency, I think it's just going to cease to be the way that people think you can get rich quickly. I just think it's going to, go, no one really cares all that much about gold. There's not, 15 news articles on the front page of CNBC talking about gold every day. So I just think it's going to settle down. Yeah, this is the thing. If you have enough people in this world that believe cryptocurrency is a thing, then it's a thing, because that's all you need. You just need a lot of people to be on the same team. Yeah. So I think, I just think as it gets more mature, people will get less excited about it. And I think it will become, it won't stay as the hip new thing that's going to make you $1 million in 3 months kind of thing. Yeah,
that's definitely got to go away at some point soon. You would imagine. Yeah. Do you want to talk about this this last story?
Yeah, I'll just run us through that. This one just caught my attention because I had no idea about these statistics. And the statistic is quite interesting. It's how much produce does Australia actually make? Of course, that's our home country, Australia. And I know that we're big farmers, agriculture is big in Australia. But I never knew how much, like what's our produce actually worth in numbers? And it turns out Australian farmers are on track to record their most valuable year yet, expected to sell $66.3 billion worth of produce in 2020 and 2021. So I did a quick conversion for anyone that's living in the heart of Melbourne. That's equivalent to 22.1 billion avocados.
About 1 billion of those are me, so.
Yeah, just to give you guys a bit of context. Jab, jab. So it says the latest forecast by the government forecaster, ABARES, ABARES, said high prices for livestock and the quick-moving export of Australia's second-largest winter crop, barley, will lift farm gate returns up 8% on the drought-riddled 2019-2020. But the shine is expected to come off next year, with the forecast farm gate value to fall to $65 billion in 21-22, reduced due to the number of farmers choosing to breed livestock rather than slaughter. So there you go. The latest outlook found, despite labour shortages, Exacerbated by the pandemic, Australian consumers did not see a large price increase for fresh fruit and vegetables, but you probably already knew that because you go to the shops every week. It forecast fruit prices to rise by 4% and the production to fall by 4%, with vegetable prices and production to remain relatively unchanged year on year. The latest outlook from ABARES also reported that the impact of the devastating mouse plague. Did you hear about that?
No,
the mouse plague?
I didn't.
No, the devastating mouse plague in New South Wales will have a limited impact on the national crop. So there you go. Some numbers, I just had no idea, but there you go. We make $66.3 billion worth of produce.
Fantastic. What happened with the mouse plague? Was there just like a really... Was it concentrated in a certain area or?
No, I think it's just all across New South Wales. You should actually, I'd encourage you guys to just look it up. Mouse plague in Australia, 2021. Search that on YouTube. You'll get some news article. It's actually insane how, I don't know why, like I'm no expert. I don't know why it's happening, but there actually is this monster mouse plague. Like there are farmers that are, just pulling up sheets over the top of hay bales, and there's just like literally like a million mice just running around.
Oh my God.
It's actually kind of scary. Like I've seen some footage and it's a bit grim, but seeing all these these monster mouse traps, and they're just killing just so many mice, but there's still so many. It's actually insane, but I guess it's good to hear that they don't think it will have a big impact on the national crop.
Wow. Interesting. That's crazy. $66 billion worth of produce, and fruit prices are forecast to rise by 4% this year.
Yeah.
Jeez, talk about inflation, 4% everywhere.
4%. I'd be interested to see how we compare to something like the Netherlands. Have you heard the story about the Netherlands?
No.
So the Netherlands basically, I don't exactly know my facts, but most of their farming happens hydroponically. So it's just vegetables grown in solution as opposed to grown on farmland. And they're a tiny little country. And the reason that they do all this hydroponic farming is because they literally got no space left. Like they don't want to give their land up for farmland. But with this hydroponic solution, they make like the vast majority of fresh fruit and vegetables for like the whole of Europe, I'm pretty sure. It's insane. Like it blew my mind. I wish I had the stats here. I just thought about it now. But I listened to some podcast where it was like, the Netherlands just makes just an insane amount of fresh produce, way more than you'd expect. Like they are by far the leader in providing produce to that part of the world, which is interesting.
Yeah, that is really fascinating. You would have to imagine that's the way that farming is going over the very long term, where
absolutely.
you can absolutely control every part of the growing condition. Rather than just relying on weather conditions, for example, and being impacted by storms and all of these things that can destroy crops or just make them grow in a different way. I know nothing about farming, so
me neither.
I would imagine, out in the weather conditions, there's a lot of factors that could be mitigated if you're doing it in a controlled environment where you're lighting things with indoor lights rather than the sun and all of these different things. I don't know.
Yeah. No, I've thought about it as well. I got so interested in it. I'd want to start a business in this one day because I think it's just there's so much disruption that could happen there. I just think you have to come out with a mass market farming solution that you can pitch to farmers and you can say, look, this wins on economics. You need drastically less space to get the same crop yield. Farming is just economics at the end of the day. So I think that, and I even took it one step further. Imagine if just all of the supermarkets, they just added a second story where possible. And that was just a hydroponic farming solution. And then it just sent food and fresh fruit and vegetables just downstairs into the shop. I mean, that would be great because you cut out all of obviously the shipping and the trucking across the country to get, bananas and pineapples here, there and everywhere. So
that would be pretty cool.
Yeah, it's something that I don't know much about. As we've self-confessed, we don't know much about this, but I think it's very interesting. Anyway, should we move on into some Q&A?
Yes, we should. So we've got a bunch of Q&A questions still lining up. So if you've asked a question and we haven't answered it, we do apologize. We're doing our best to get through at least a couple every single week. But as always, if you do have more questions that you want to ask, you can by heading over to the YouTube version of the podcast at youtube.com/The Young Investors Podcast. Just click on the latest episode and leave your questions as a comment below the latest episode.
Should I ask this one to you? I've got a good question for you.
Mm-hmm.
Should I hit you up with this one?
All right.
It says here, if inflation may not be good for the stock market in the short term, wouldn't it be a good thing from a long-term perspective? I mean, if I own some shares in Apple, in the short term, the expenses will increase, but eventually every one of my... Oh, sorry. I read that wrong. If I own some shares in an Apple company, in the short term, the expenses will increase, but eventually every one of my apples will be sold at a higher price. I mean, it's an interesting question.
I think it's a really good question. And I think inflation in general is a hard concept to grasp, just overall, because, we know that it's the increase in the prices of things, but how do we kind of feel that and what impacts does it have? And it can take a lot of different shapes depending on where the inflation is as well. But essentially, a little bit of inflation is good because you want your money or the cash that you have in your bank account to be devalued slowly over time so that you're encouraged to spend it, because we don't want people just to be hoarding money. If you have deflation, then that means products are going to get cheaper over time or are getting cheaper over time. And that further encourages you to hold back, because if that car you like is going to be cheaper next year, why on earth would you buy it this year? You would just wait a year and just have a little bit of patience, and then you can buy it next year. And that's obviously not good for the economy. We want people to spend money to fuel businesses.
That's what happened in Japan, right? The deflation. That was a big thing in Japan. People were just not buying stuff because they knew if they waited a few months, they could get it cheaper.
Yes, exactly. And it's very difficult to get out of deflation. It's probably the worst thing that can happen because, as you said, if people are not spending, then prices will go even further down because businesses are like, hey, please buy these products. Now we'll price the car even cheaper and cheaper and cheaper. But then people see they're getting cheaper and they're like, well, we might get even cheaper tomorrow. So we don't want to spend money. And that can be a vicious cycle that's very, very difficult to get out of. But the way I like to think about it is, and this is kind of just an example, but the inflation number is just reflecting the average change in prices for a basket of goods. Okay, so it's not saying that everything has gone up by a certain percentage, right? If we had a 10% inflation rate for 2021, for example, that doesn't mean that everything has gone up by 10%, because if everything went up by 10%, nothing would really change except the numbers. And in that example, that's kind of what you're describing with the Apple thing, that nothing's really changed. Like my wage goes up 10%, but the cost of everything goes up 10%. That just means I have more money, things cost more money, but we're in the exact same position as previously.
Yeah.
That's not really the right way to think about it. What is a better way to think about it is if we have a 10% inflation number, that could happen with your wage staying the exact same, the cost of energy staying the same, housing costing the same, but food is way more expensive, right? And in that case, that's bad for businesses because people will just spend less money because they can afford less. If your wage hasn't gone up, but the cost of certain goods has, then, and if you have to buy those goods, for example, if it is food, then you're just going to spend more money on food, and that means you have less money to spend on discretionary things or other things. And that hurts businesses overall. The other thing I just wanted to mention was on this is that inflation particularly destroys businesses that don't have competitive advantages. And this is where looking at businesses that have something unique that customers need and desire is super important. And the best example of this is Apple, the company Apple, not apples in this case, but the company of Apple, regardless of what's happening with inflation generally, they create their own inflation in the price of their iPhones by just increasing the price of it every single year by a huge amount in some years, sometimes by $100 or $200 at a time. And why can they do that? Well, because people want to buy the iPhone and you can't get an iPhone from anywhere else. You can't be in the Apple ecosystem anywhere else. Other phone companies don't raise their phone prices by $200 a year. And the reason why is because people would stop buying those phones. In companies that don't have competitive advantages, when there is high inflation, they see higher costs because the cost of the materials to make the phone has gone up, but they can't charge more for their phones because people would switch to other phones. And that just means they make less money. So that's kind of a couple of examples of what could take place in a high inflation environment. And it's a little bit more complicated than just saying the price of everything goes up at the same rate.
Yeah. No, I agree. Yeah, that's a good point. If inflation goes up by too much too quickly, then, and this is something that just a point I wanted to make that I learned from Elon Musk, it kind of made sense. When he talks about Teslas, there's kind of two factors to any purchase. There's the value for money aspect, and then there's the affordability aspect. So you can have infinite value for money, but if the product isn't itself affordable, if you don't have enough money to buy it, then the consumer obviously can't buy it. So I found that really interesting with Elon, who's saying, obviously, in relation to Tesla has great value for money. If you buy a Tesla, you are getting the best car, the best performance versus price. But the problem they have is that their cars simply aren't affordable for some. So yeah, I think, like, obviously you want inflation at a small amount is fine, but if you have inflation too fast, then it just means that a lot of people can't afford stuff, and it has really detrimental effects. So yeah, interesting.
Absolutely.
Interesting. Yeah.
All right, I'll pose this question to you.
Sure.
This one at the top here or near the top.
Yep.
Okay. Do you both continuously add to your stocks until the price falls below your margin of safety, or in one lump sum, indicative of Monish Paparai's idea that once you find that great price, you swing for the fences?
Yeah, I think in this case, I definitely wait until I've got a margin of safety, because that's just an integral part of my investing kind of philosophy. I don't want to invest at something that's not at a margin of safety. But if it hits that margin of safety, I'll start buying. I won't put all of the money I want into that stock immediately as it hits the margin of safety. Because a lot of the times, if a stock's going down, it continues to go down. So, I start buying at the margin of safety. And, I think Phil Town talks about this as well. If the price continues to get cheaper, then you're getting an increasingly good deal. So I just continue to buy as the price goes down. I certainly don't just take a lump sum and just dump it in and be done with it. I'll make a significant investment if it hits a margin of safety price, especially now because it's so rare. But yeah, I do kind of phase my money in, over time. What do you think? Do you kind of follow the same philosophy there, or different?
I would say pretty similar. I think we probably both do this. So when we're coming up with what is the margin of safety price, what's the price we're willing to pay, it's not just going to be a single price. It's probably going to be a range of prices, right? So if the stock falls to the top end of that range, it'll be within an area where I'm confident that I can make a certain return. But of course, if the price was to fall further through that range, then I would be even more confident. And the only time that I would describe swinging for the fences, which is where you're just going all out, is if the stock price went to the bottom of that range. And that hasn't happened very often for me. I think that's only happened to me on one stock, which went from about $35 per share to $4 per share. And this is a company that's growing at 25-30%. And it was, it was priced at a 6 PE or something ridiculous. It was insanely cheap. So I would have described what I was doing with that as swinging for the fences. But in most cases, the stock, in the very rare occurrence that a stock falls into a margin of safety price, it's not getting all the way down there. It's just getting, just cheap enough. And I'm, putting a significant amount in. Don't get me wrong, but I'm not putting, 40% of my portfolio in there or 20% of my portfolio until it gets really far down into that range. But yeah, in terms of how the question is worded, do you add until the stock falls below your margin of safety price? No, I don't do that. I wait until it hits that margin of safety price before I start investing.
Yeah, that's fair enough. All right, shall we do one more question?
Yes.
All right, I'll ask this one to you. Thank you for the podcast and the useful knowledge. We appreciate it. The question is, can you define the circle of competence? Like, how do you know that whether you're outside your circle? how much do you need to know in order to confidently say this is within my circle of competence?
Yeah, I think there's no real easy, clean answer to this. There's no kind of rule book whereby if you tick, okay, this business is within my circle of competence. I think it's something you kind of have to feel around about. And I think the way Warren Buffett describes it is like knowing whether you're inside or outside rather than knowing where the edge is. I think the best way to approach circle of competence is try and pick topics or pick industries where you think that would be, right in the center of your circle, right? There's certain things that you know a little bit about, but you might not be sure whether it's, just on the inside of your circle of competence or just on the outside. Whereas there's other topics, areas you've worked in or areas you've studied deeply, or products or services that you're really passionate about and that you've just been naturally interested in looking into for the past 5 or 10 years, for example. There's areas where you know a lot about certain businesses. Yeah. So starting in those areas, I think is really good. And the other thing that Buffett talks about is it's not just enough to sort of be passionate about certain products. What really the circle of competence means is to understand deeply the economics of a certain business. So how does the business make money? What expenses are generally taken on by that business? What is the end-to-end process for that business in terms of getting raw materials or a service or software to a customer? Who's in between there? Distributors and leasing land from landowners and that sort of thing. Like, what's the entire process there? And how do they reinvest money and grow? What's their business model for growth? That's really what you need to understand about a business for it to be within your circle of competence.
Yeah. And I think the only thing I'd add on to that is that if you make an investment and you start getting nervous about it, then it's clearly it's not in your circle of competence enough yet. That's the only other thing. If you invest within your circle of competence, then you're very confident. And I don't know what an example might be. When we've made an investment, like for me in Facebook, and then Facebook stock plummets by 30%, I'm like, look, I don't feel stressed out at all. Like my portfolio or that position just lost 30% in 3 weeks, but I do not feel stressed about that at all. Whereas if you see a drop of 10, 20, 30%, and then you're like, oh my gosh, do I sell it? Should I buy more? I'm not really sure. I think that's a good indicator that you just don't quite yet know enough about the business to make a confident investment. Because there are stocks I'm like, oh yeah, I could buy that. But I know that if I invested, I'd just be like, oh, sheesh, I'm not quite sure. Whereas the stocks in my portfolio, I'm like, yeah, I do not, even if the stock went down 50%, I do not want to sell this.
Yeah, exactly right. I think Thor Industries is kind of like that for me at the moment. The business is performing extremely well, but I didn't even really notice, but the stock is down 35% from its high, but I didn't even notice.
Right.
I don't even look at the stock price all that often. And when I did look at it, it wasn't like, oh my God, is this going to go down even further? It doesn't bother me at all because I've looked at the annual report, I've looked at the quarterly reports, and I can see what the actual business is doing. And I know what it's doing because I understand it and its economics. So, that's a completely different frame of mind and tells me I'm within my circle of competence compared to when I look at other businesses and the stock falls a bunch and I think, is there something going on that I don't understand? Whenever you have that sort of doubt or that question, then you need to do more research. You need to look and understand what's going on.
Yeah, I think you bang on.
Bang on. So is that where we should wrap things up for today?
Yeah, I think so. Sorry, my voice is just falling off a cliff right now. So I think probably it's a bit of a shorter episode, 10 minutes shorter, but I think that's probably, you guys don't want to hear any more of me today.
No, it's this has been a really good episode, even though we're going to cut it short a little bit. I think we went longer than we were actually intending on going because Brandon is
we still did well.
Feeling a bit under the weather today. But thanks everybody, as always, for tuning in. We very much appreciate everybody who spends an hour of their day, or today, about 50 minutes of your day with us. And as always, if you want to check out Sharesight, you can sharesight.com/young investors to get 4 months off a yearly subscription. Go check it out if you're interested. And thanks to everyone who has used that link and is supporting the podcast. Thanks, Brandon, for joining me as always. Hopefully you're a little bit better next week.
Sorry, team.
Yeah, so we can be back next week for a cracking episode. But thanks everyone for tuning in. We'll see you guys next week.
Bye-bye.